Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 trending stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at a few trending stocks. Now these are stocks that have been gathering a lot of attention from Wall Street lately, and on top of that these come in with a strong buy consensus. So we're going to take a look at these companies, what it is that have analysts excited lately, and what they're predicting for these stocks' future. Of course, we found these stocks today using the TipRanks Trending Stocks page. This can be found under Research Tools on the TipRanks website. Today, we're looking at the best ranked stocks within the last 7 days. And just a reminder to make sure you've downloaded the TipRanks mobile app so you can stay up to date with all the latest analyst ratings on the go. Links are in the description down below. Now let's get right into our trending stocks. First up, we're taking a look at DraftKings. Their stock trades under the ticker DKNG, currently priced at nearly $36 per share, and this comes from a low of $10 within the past year. They've seen phenomenal growth of 185%, including a recent jump up this past week. DraftKings is a leader in the world of online sports betting and fantasy sports leagues. They offer customers a wide range of products, including online casino gaming, a comprehensive sports betting package, and a popular fantasy sports league covering most professional sports like football, baseball, basketball, hockey, and more. The company just shared their latest quarterly report on November 2nd, where they not only came out with an earnings beat, but also an increase to their future revenue guidance. For their third quarter, DraftKings reported revenue of $789.9 million, and that was an impressive increase of 57% year over year. Their loss per share of 61 cents came in better than expected as well. Along with these results, they also raised their 2023 revenue guidance midpoint and introduced fiscal year 2024 revenue guidance of $4.5 to $4.8 billion. Their management said that their fantastic third quarter results demonstrate the positive impact of their product and technology investments, as well as excellent preparation and execution by our entire organization. This latest earnings report has plenty of analysts reiterating and increasing their price targets, one of those being a 5-star analyst from Northland Securities. They raised their price target on the stock after those Q3 results exceeded expectations, and the increase to their future guidance was well ahead of consensus estimates. They said that their firm's increased price target reflects increased customer engagement and retention, easing promotional intensity, and 2024 guidance upside. One other analyst from Argus noted that declining customer acquisition costs bode well for the company's long-term growth and sees them registering their first profitable quarter by Q2 of 2024. The DraftKings stock currently comes in as a strong buy with 27 analyst ratings. With 23 buys and 4 hold ratings, the average price target of about $39 would be upside potential of 10%. Looking down below at our most recent ratings, on the low end we have a hold with a slight downside of about 2% and a high-end price target with an upside of 39%. Our second trending stock is Block, or the company formerly known as Square. Their stock trades under the ticker SQ, currently priced above $51 per share. Now, unlike DraftKings, they are in the red this past year, down 18%, and 18% in just the last few months as well, though they have recently taken a move upwards here this past week. Block's goal is to help diverse audiences overcome barriers to access the financial economy. They have a handful of applications, including their 2 most popular with Square and Cash App. Square helps sellers more easily run and grow their businesses with their integrated ecosystem of commerce solutions, while Cash App is focused on redefining the world's relationship with money by making it more relatable, instantly available, and universally accessible. As you may have guessed, Block is trending with analysts following their latest earnings report, where they came out with better than expected results. For their third quarter, they reported earnings per share of 55 cents, coming in 8 cents ahead of analysts' expectations. They also saw gross profits of $1.9 billion, which grew 21% year over year. The company increased their full year 2023 guidance for both their adjusted operating income and adjusted EBITDA. Founder Jack Dorsey made comments that while they have exceptional AI talent at the company, they haven't been using it effectively, and they're putting a huge premium on this work, starting with increasing their engineering productivity not just within Square, but across all of Block. With plenty of analysts reiterating their buy ratings following this report, we did hear from a 5-star analyst at Wolfe Research. They noted the company's management demonstrating a firm commitment to fostering profitable growth, which was reflected in the rollout of their fiscal 2024 profit targets that were significantly higher than the street's expectations. They also considered the company's strategic expense initiatives, which include reducing the overall workforce and achieving further overhead expense efficiencies. Overall, the block stock currently comes in as a strong buy with 33 current analyst ratings. That breaks down to 25 buys and 8 holds, with an average price target of over $71. That would be a growth potential of 40% from current prices. Down below, we can see plenty of these ratings pouring in just the last week here. On the low end, we do have some hold ratings with upsides just shy of 8% and some pretty big high-end price targets here, north of 82%. And our third trending stock is CyberArk Software. Their stock trades under the ticker CYBR, currently priced at $181 per share. They've seen overall growth of 24% in the past year, including growth of 25% in just the last few months, and once again, another jump up here at the start of November. CyberArk is in the business of security software solutions. They use proven cybersecurity measures like access control, authentication, encryption, and firewalls to protect your company against hacks, attacks, and other cybercriminal activities. They protect your server or vault, but also safeguard your user data with authenticated access security. They just shared their Q3 report on November 2nd, where they nearly doubled their earnings estimates and exceeded expectations across all guided metrics. Their Q3 earnings per share came in at 42 cents, well ahead of the 23 cents anticipated. Management said that they delivered one of their best financial performances in the company's history in this third quarter, and their business accelerated. The subscription portion of their annual recurring revenue came in at $504 million, which grew 68% year over year. With these results, the company significantly raised their full-year guidance. Reiterating their buy rating on the stock, we have a 5-star analyst from Canaccord Genuity. He said that he sees CyberArk as a long-term player in the security software market, building upon their leadership in the crucial PAM segment with their expanding portfolio. He believes that CyberArk, with their broadening identity platform, is uniquely positioned for ongoing consolidation in the cybersecurity sector, driven by customers choosing a more platform-based approach. CyberArk's strong buy rating is based on 22 current analysts with 20 buys and just 2 holds. Their average price target comes in just shy of $200 per share, which would be an upside potential of 10% from current prices. And of course, down below, we have our big list of price targets here. On the low end, we do have some holds at that 7% mark, one buy just shy of 7%, and some high-end price targets north of 20% upside. So there we have 3 stocks that are trending with Wall Street analysts following some strong third quarter earnings reports. Let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing with what those Wall Street analysts are up to, providing some insight and entertainment. So please make sure you're always doing your own research and due diligence first. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.